Hi guys, and welcome to Price Action Trading School. My name is Nenad, and today trend lines, channels, and Bollinger Bands. So this is revised Price Action Trading School session number 12, and this webinar is being recorded. It will be uploaded to YouTube channel. And if you have any questions, guys, do not hesitate to send us an email or leave a comment below. So today's agenda: trend lines, channels, and Bollinger Bands. Okay. Also, guys, this is a promotional material for our partners, FXDD. If you open the account, make at least 2 or 3 trades. Send us the info and the screenshot that you actually made a trade, and you will eligible to receive our free indicators. So some of the indicators are paid, but you will be able to receive it for free if you open your FXDD account with this link, guys. So please use this link. It's very important, and then you will be able to receive some of our paid indicators for free that soon we will actually put it on our website. One of those indicators is the ATR indicator that I extensively use in my trading each day. Okay, so you will be able to receive it. So let's cut on to the chase, and let's go with the first thing that is on today's agenda. It's trend lines. Very, very important trend lines, guys. So we will start with this. I always try to be very simple in my explanation, and I don't want to overcomplicate things. It's always best to be straight to the point. Okay. So trend lines are simply a representation of price action. There is an uptrend trend line, and there is a downtrend trend line. It's very, very simple, guys. Once you see the bottoms, you just connect 2 bottoms. One of the most important things is to connect 2 bottoms that show wicks. We already know what wicks are because we covered that in our candlestick class. So when you see the wick, connect it to the next wick, or if there is no wick, connect it to the bottom of the candle. But wicks, those are more important than bodies, so always try to connect more wicks. So here the trend line is valid when it has 2 touches. 3 touch trend line are stronger. More than 4 touches and the trend line might become weaker, okay, and it could break. So 2 touch trend line for basic trend line charting. 3 touch trend line even stronger. 4 touch, okay, more than that, it could break easily. I usually use 2 or 3 touch trend lines. For me, those are simple, more than enough, and I think that 2 touch trend line is the base for a forming of a valid trend line. Okay. So ascending trend line, descending trend line. Okay, remember that, guys. Positive slope trend lines are actually a rising, a bullish trend line that forms a positive slope. It is formed by connecting 2 or more higher lows. Okay, so this is a positive slope trend line. Again, positive slope trend line, 1, 2, 3, 4, 5. And what happened after the 5th touch? The price broke the trend line. So that is what I'm saying, guys. You will need most of the time 2 touches, and 2 touch trend line is valid. Remember that. 3 touch trend line stronger. 4 touch, okay. After the 4th touch, well, you see the price broke down. A falling or a bearish trend line will form a negative slope, and it is formed by connecting 2 or more lower highs. So 1, 2, it's enough. 3, great, even stronger. 4, okay. 5, and after the 5th, it broke. You see? So the more touches trend line has, the weaker it becomes. So that is why I always say stick to 2, 3 touch trend line, and 4 is the maximum. Okay. Validation of trend line. Join the 2 points on trending market. And the third touch should provide you with more support and resistance. 1, 2, it's a valid trend line. 3 touch trend line, more support resistance. Bang, after the 4 touch, 5th touch, broke the trend line. Invalidation of a trend line, the break of the previous high, lower high is called the invalidation. Okay, bang, what happened, guys? The price broke it and proceeded downwards. So it's important to know, you don't trade trend lines themselves. You use it in conjunction with other tools, price action tools, to validate your trade. I trade trend line breaks only with divergence trading. So when I see divergence, that is the time when I would use a trend line. I will talk about the divergence. It's not the subject right now, but just to let you know, divergence trading is actually traded with trend line breaks. For other trend line breaks, naked trading, guys, you don't trade trend lines alone. You need to have a confirmation of other indicators to actually trade a trend line. Okay? And you see the invalidation. Once more, bang, the invalidation. Now, trend channels. What are trend channels and how to use them? Now, before we actually go to what is a trend channel, whatever, guys, just let me quickly show you. Here we have actually a chart. This is euro-dollar chart. You can do whatever the time frame you want. Easy, guys. Go to insert, okay, trend line, and place a trend line. 1 touch, 2 touch. Now the trend line can be rayed out. For my analysis, I don't use trend lines except if it's really some sort of a bigger trend line, so I can use it. With trading, I simply unrate, but you can rate here, okay, and you see now 1, 2 touch, okay, 1, 2, the 3rd touch, 4th touch, and then it went, okay, like this. So easily, guys, they're very easily placed. Here also, guys, trend line, 1 touch, 2 touch, you see, 3rd touch, and then it broke down. So those are trend lines. Now let's get back to channels. Okay, what are trend channels? Trend channels are powerful trading tool. There are bullish and bearish trend channels. You can trade the channels, although I mostly use it for the analysis. But if you are a counter trend trader, or if you want to trade a counter trend, then trend channels are reversal indicative. Okay. Doran is asking just a quick question now. Does the trend line need to be at exactly the end of the candle or candle wick? Or it's approximate? Okay. What I do usually, guys, I connect wicks. For me, it's very, very important. Wicks, this is the most important part. Wicks. Okay. Candle wicks. If you don't see candle wick, you will usually see candle wick. But if you don't, then connect bodies. So candle wicks are important. You see how I did it? You don't need to be surgically precise to draw these guys. I mean, I don't sometimes, really most of the time, I don't even chart trend lines because I can see them without placing them on my chart. Let's say that it's okay like this. Connect the wicks like here, and connect the wicks like you see. You don't have a wick here. I will zoom it in, but it's okay to place it like here. Okay. It's okay from the body to the wick. And this trend line is very clear. You see what happened here? Exactly a retest here. See? 1, 2, 3, 4 touch, broke to the upside. It definitely went up. You see how the 4 touch broke it into the upside. Retest, continuation now. Okay, so with trend channels, guys, as I'm saying, it's usually about counter trend trading. I do chart trend channels, but I'm not actively trading them. I trade my own method that was based, of course, on this price action trading school that you're seeing now. It's called Camarilla MACD. You can check the stats on our ECS sheet. You can check my FX book account that is connected to our Telegram channel that we use to send signals, trade ideas. Okay, what I trade, I put it there, and you can check my FX book account also. So trend channels, usually for counter trend trades, I don't use them very extensively, but if you want to trade counter trend, they're useful, both for entering and exiting the trade. Guys, bullish trend channels, two positive slope trend lines and closing the price within, made up for a bullish trend channel. Make up for a bullish trend channel. Upper trend line acts as a resistance, lower trend line acts as a support, as you can see it here. The price makes higher highs, you actually go short there, buy here, short here, buy there, short, buy, and so on and so on. Sometimes if you're just a trend trader, you can trade a channel that is inclined in a trend direction. So in this example, we would go long. See, if we enter long here, we placed our stop loss here, and this is risk to reward. You see higher high, and this is how you can do it. For bearish channel, two positive negative slope trend lines and closing the price within. This is a typo, guys, so it's actually negative slope. Upper trend lines acts as a resistance, lower trend line acts as a support. Price makes lower highs and lower lows. Resistance trend line is of interest. So short here, okay, this is your reward, stop loss goes there. This is the risk, this is the reward. Basically, this is how you trade, guys, trend channels. So wait for a swing to form, throw a channel, trade the rejection above last high. In this case, this is very clear. For uptrend, here is stop loss. For downtrend, here is your stop loss. This is reward, and it's very easy. You can use another form of a channel, and it's called an equidistant channel here. You can find it on the charting tool. Usually it's your platform. So like here, you see, just connect the bottoms, like here, like I did, and connect the tops, one top, second top, one top, bottom, second. You see, rejection, and now the price broke the channel to the upside. So there is a small reversal forming, obviously, on euro dollar. So you see, this is how we do it. It's bit easy. You just need to practice a little bit, and it will all settle down. But use these, guys. As I was saying, this webinar is being recorded and uploaded to YouTube. So you use these examples for placement of long trades if you want to trade channels. But I advise you to use it with other price action tools, not by themselves. And finally, guys, yeah, and of course, this is all a part of our price action trading school, because after we finish price action trading school, there will be some prerequisites for you to gain a free template, as I already said. Sign up for FXDD, so you will be able to and trade, make 2 or 3 trades, so you will be able to pick up some of the free indicators that are now paid, but for you it will be free. And when you finish with price action trading school, you will be able to receive a full template with all these automated indicators that will print out channels, everything. But we will talk about it at the end of our price action trading school. Bollinger Bands now. Okay, Bollinger Bands, very important. Wait, okay, we use it in counter trend conditions usually, but if you want to use it in a trend conditions, wait for a pin bar break above or below band, then close inside of the band. That is a single most important thing that I do for my Camarilla MACD MTF. Of course, there are other indicators that confirm. It's not freely available. You can check it on our website, but results are great. I'm trading it actively, connected to my fixed book. And but this is a primary prerequisite for a trade entry. Waiting for a pin bar break to break above or below band, depending on direction, then close inside a band. It's important, guys. Outside, inside close, I call it. So close inside after the break is the most important, guys. And it works best when trend is not very strong. We are waiting for a breakout. Then we can take some 70, 50, 70% of ATR. When we see that in a trending mode, they are strong, but you need to pay attention to the ATR because the move already started. You know, guys, how to define a move if it started or not. After consolidation that is sideways, there is a new trend forming usually. The more the swings the trend has, the weaker it becomes. So that is why when we use entries in trending market, we usually cut our targets. But when entries are made, when price is consolidating and there is a breakout, then we can go with 50 to 70% of ATR. I will be explaining why the ATR is one of the most important thing, guys, and why 95% of traders are not successful. They are not following the ATR. I'm talking from intraday trading perspective. I'm an intraday trader. I leave the trade sometimes for a night, but you can check my ethics book. It will tell you everything. I'm not just talking the theory crap. This is the practice, guys, okay? Bollinger Bands. This is my Camarilla MACD MTF. You see? Outside, inside close, usually the price will go down. Outside, inside close, guys, and the price goes down. Euro dollar, we had some good trades. You see? Outside, inside. Of course, I'm talking now, guys. These thinning lines are Bollinger Bands. This is higher time frame Bollinger Band. But you see here, outside, inside close. Outside, inside close. Okay, these are, you see here, outside, inside close. This is Camarilla MACD MTF. Okay, you see here. You can use whatever you want, guys. Outside, inside. Usually very, very, very successful. Yeah, sideways trend. Here also. Here also. You see? These are all potential entries. So, you see, outside, inside close. It's important for the Bollinger Band. This is, guys, the single most important thing, guys, for you to understand. Of course, I cannot tell you the rules. This is paid method. But just as information, outside, inside close, the most important thing with Bollinger Bands, guys. You see how, even CAD here, I'm not trading it actively, but see how a lot of good entries, especially on major pairs. Watch this. Outside, inside, of course, validated with other rules. Not each outside, inside close is profitable, but you have filters for that. Outside, inside, outside, inside, outside, inside, outside, inside. What do you say? The magic, guys. Yes, one candle closes outside, the second inside, or the same candle breaks the lower Bollinger and then closes inside. It can be also for upper Bollinger. It doesn't matter. So break of the Bollinger and close inside, as Marius was saying. Exactly. Ali is saying, hi, Nenad. Bollinger Bands are very critical and great in your Camarilla MACD MTF system. This system is excellent. I agree with you. This system is excellent. And again, outside, inside close. Outside, inside close. You see? Okay, very, very important, guys. Bollinger Bands are volatility-based indicator. Primary trend following, if you use it as I do, outside, inside. We identify breakouts after the flat market. Bang, we go for 50% of the ADR at least. If the market is already in a trend, we cut our targets. One of the most important things, crucial things, is to know when to exit the market. Without knowing when to exit the market, you will not succeed in Forex trading. Simple as that. Okay? It's simple as that. And we will come to that point when we talk about the ATR, with Camarilla pivots, whatever. That is the time when I will teach you how to exit the market correctly. This is the formula, guys, for a Bollinger Band. I use standard Bollinger Band settings. Mr. John Bollinger did a wonderful job with standard settings, and we don't need to change anything, guys. 20-day exponential moving average, okay? 2 standard deviations, and that's it. You don't need to go with 150, whatever, guys. The point of Forex trading is to make money, not to spill a theory, endless theory. There are tons of videos on the internet. Endless theory is, where is my fixed book account? Where is statements? Where is the sheet where those trades are taken? Everyone is talking about some theory. No one is showing their results. Well, you come at the right place. We do both. Okay, guys. Now, if you have any questions, feel free to ask me. I hope that this information will help you out. We are just going one step towards our goal. Slowly riding, okay, Bollinger Bands towards the pyramid where you will know a lot about price action trading. So sign up for these webinars, watch the recording, guys. Any question, whatever is not clear, feel free to ask. We are always at your disposal. I wish you a great trading day. I don't see any questions. I always try to be very concise, very strict with my information. Anything that you need, guys, just ask. We will help you out always. Cheers, guys, and as always, trade safe.